Hello, Internet friend. Today on Value Side, Wall Street in Love. I'm David Ravel. Well, I rarely remember a time when the street was as enamored as it is now. And the object of its affection is a new technology called artificial intelligence, or AI for those who know. Passions are riding high on the lower end of Manhattan as analysts and traders view the potential of this new AI as virtually limitless. Usually understated and reserved, the street is captivated by projections of boundless wealth from this dynamic new technology. Sparking this new gold rush was the introduction in 2022 of an AI application that anyone could use. ChatGPT created an all-new chatbot that promised to answer any question. For researchers, it's a wealth of news and data. For students, a source for that term paper. And for everyday users, a way to keep up with the latest news and information. Launched by OpenAI in late 2022, ChatGPT was an immediate sensation, gaining 100 million users in just a few months. OpenAI is an engaging corporate structure comprising the not-for-profit research arm OpenAI Incorporated and the for-profit OpenAI Global LLC. This allowed the not-for-profit to leverage various research entities to develop the chatbot, while allowing Microsoft to gain revenue from its contributions to the project. Microsoft invested an estimated $13 million into OpenAI and provided its supercomputer to run the various applications. After several attempts at developing a useful, user-friendly AI application, ChatGPT struck gold. The sheer number of users was enough to alert corporate America that something special was happening at ChatGPT. NVIDIA was already on board, as it was the supplier of the AI chips used in the Microsoft computer. However, Tim Cook's phone must have been ringing off the hook down in Cupertino, California, as customers were asking when Apple Computer would have a comparable product. Apple's response came with new versions of its iPhone, MacBook, and iPad, which its newly created division developed, Apple Intelligence. For both Google Alphabet and Amazon, ChatGPT's success only contributed to their existing AI initiatives. Both companies had developed virtual assistants and cloud-based services that utilized AI, as well as other applications. For Tesla, a new set of AI-augmented robots is in the work, and for Meta, Facebook, AI will provide augmented and artificial reality in various applications. Although each of these companies provides different applications for their customers, AI unites them all. That and the incredible stock market valuation that has followed. As we noted earlier, Wall Street is absolutely smitten with this new technology. They simply cannot get enough. When measured by the Standard & Poor's 500, the top publicly traded companies, investors have put 40% of their money into these top 9 stocks, all of which are now AI-oriented. These top stocks include Apple Computer, NVIDIA, Microsoft, Google Alphabet, Amazon, Meta, Tesla, Broadcom, and Taiwan Semiconductor. It's a remarkable concentration of wealth. In dollar terms, of the $50 trillion in S&P 500 stocks, nearly $21 trillion is currently invested in these 9 companies. Forget the other 491 companies that make up the rest of the index. They'll have to fight over the remaining $29 trillion. Most interestingly, this concentration of wealth is almost entirely a bet on the future, not a recognition of current company performance. Now, investment analysts have a way of measuring the relative value of a company's business. They measure the company's earnings versus its current price. This, of course, is the much-used price-to-earnings ratio. Consider the P/E ratio as a simple benchmark. a way to determine the current stock's price versus historic norms. For instance, in the 21st century, the stock market trades at a PE of roughly 20 times earnings. On average, you would expect to pay $20 for every $1 of company profits. Put another way, we expect a company priced at 20 to have a corporate earnings of about $1. It's a benchmark. Pay below $20 for that stock, and you're getting a bargain relative to the rest of the market. Pay above 20, and you're paying a premium over the market's value. Now, currently, the majority of stocks in the market are trading slightly higher than normal with a PE of about 26. This is a high PE, but not excessively so. So, how are our top 9 stocks trading? Well, would you believe that the PE of the top 9 is currently 52, double the rest of the market? Put another way, investors currently pay $52 for each dollar of corporate earnings for these AI-powered mega stocks. And this is why the top 9 stocks trade for more than $1 trillion each. And Apple, Nvidia, and Microsoft, the 3 most AI-centric companies, trade for more than $3 trillion. So what does this tell us? Based on our standard PE benchmark, these stocks' prices are way out of line with historic valuations. While an average stock trades with a PE of 26, these 9 companies are priced at double that. This is because investors are totally enamored with their potential. Put another way, these elevated valuations are based solely on AI's future potential. Speculation on what might be, not what is. Market historians have a word for this particular type of investor behavior. They call it a bubble. It's when investors turn to speculators and old benchmarks are thrown aside in the belief that this time it's different. Let's hope, for all of our sakes, that this time truly is different, because the alternative is most unpleasant. And that's today's Value Side. For all of our articles, references, and podcasts, visit valueside.com. I'm David Ravel. ValueSide is independently written and researched. The views expressed are strictly my own.